A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is FOMC Live. Today, we're going to give you a preview of the FOMC Minutes release, which is going to drop in about an hour. We're going to look at all the biggest markets. Right now, the movers and shakers are commodities. And let's get out to our 9 EMA strategy here relatively briefly. I would like to execute a trade, and right there you can see on our WTI 1-minute chart, we have an opportunity to get a buy here. 9 EMA trading strategy. You can access our strategy pack over at switchmarkets.com. It's got everything you need for to get up and running with this strategy relatively quickly. Let's go ahead and just make a real nice scalp out of this. A lot of volatility right now in the crude oil market. This would be a situation where we're taking a 1-minute bid in this WTI, and we're starting to really see a little bit of that bullish price action. It's always the biggest thing you always have to do when you're trading a strategy like this, especially as tight as a 1-minute 9 EMA with RSI confirmation. You've got to dial in your risk versus reward. You have to understand exactly what it is to be in the game for a long period of time. You see right there, okay, there's our signal on Brent. Let's go ahead and take the Brent trade. Now you've got a Brent bid. You've got a profit target just up above there. You got a stop loss. We could play it really tight, or we could give it a little bit of room. Realistically, it's up to us. Let's go ahead and just play this one really super tight. I want to make a nice tight scalp. If we get good price action to the bull, that's fine. If we don't, that's fine too. Interesting day, though. We're fighting just a juggernaut of a downtrend for the oil markets, off big today. A lot of people believe that the war in Iran may be winding down. I believe it's going to fire up relatively soon. We've got a few events out there that we do have to cover on the news front that are really big, and they're breaking news items. We're going to get to the FOMC minutes. We've got about an hour before that's released. I'm going to go through and show you pretty much exactly what we need to be looking for in the last FOMC minutes release of the J-Powell era of the United States Federal Reserve. Getting ready to turn the page to Kevin Warsh, and I think it's going to be a fascinating dynamic to see Warsh come in amid a Fed that is deeply conflicted and really struggling to figure out which way they can get control of inflation without tanking the U.S. economy, given the Iran war and the energy pressure that's being placed on everything. There were some really big things that have happened here in the last 24 hours, last 18 hours, that one of them is very symbolic. We don't know exactly what's happened just yet, and the other one is going to be something that we did not think was the case from the Iran war, but we saw an official Pentagon report out that told us that the Iranian damage to U.S. air assets was a little bit more significant than we thought. And I'm going to go ahead and show you some of that because I want to really set the stage for what we're going into for late May and June trade. In my view, it really does look like the war is going to be starting up again here relatively soon. Whether it's this week or next week, I just don't know. I'm not an insider, but we are seeing signs. We are seeing clues that maybe, just maybe, this thing's going to kick off again in relatively short order. So you can see right there, you can see we went right down to our stop loss, did not get filled on our stop loss. Go ahead and just make this worth our time if we do get a bullish bump here out of that Brent crude trade, but still sort of on life support here. Market's flatlined. Very difficult to go against a strong intraday trend using something like the 9 EMA, especially on a 1-minute chart. This is one of those where we're either right or we're wrong, and right now you can start to see these trades sort of play out. Down a little bit, the market's really flat. What you want to see is big bullish price action when you're taking a 1-minute trade like this. You want to see it spike in your direction and give you a real chance to get in on some bullish momentum, and right now we're just not seeing it. We're probably going to get swept out. So I want to say hi to everybody out there in YouTube land. It's good to see you, Kelvin. Today I made some good profit. This week's all about showing myself I could trade, and then next week I want to start a live account. It's fantastic, Kelvin. When it comes time to start a live account, pretty much know what I'm going to say. I'm going to direct you on over to Switch Markets, then get you set up with a lot, especially if you're just starting out. They have those bonuses that could really help you boost your purchasing power. Get you up and running with maybe a little more liquidity, maximize your capital efficiency, as they say in the markets. Jason Max, and peace, Jason. How are you? T Marina, happy hump day, T. Good to see you, Ralph H. over in the How to Trade community. Ralph H, Tuku, Andrea Garwal, Dave's Apple. Good to see everybody back. If you guys have any questions at all, be sure to ask. And look at this oil trade back from the dead. Right, this is one of those. Fighting a stiff trend, I would say we have probably a less than average chance of winning. However, as long as our risk versus rewards dialed in, 1 to 3% of your account balance on any given trade, I will give you a max of 5 to 7%. If you go 7%, don't tell anybody because that's a heavy risk on just one trade. But if you're at 5%, I would probably look the other way and let you trade at 5% risk. That's a lot of risk. You can't lose too many in a row trading 5%, but sometimes if you have a small account to make it worth your while, maybe 5% is the way to go. All right, so we do want to get started with a few news events that, they're fascinating. Massive explosion after vehicle catches fire near New York's Wall Street. This was right outside of the Wall Street Bull. You guys know the Charging Bull, sort of the epic, the iconic bulls on Wall Street. This car exploded Wednesday near Wall Street after catching fire in Lower Manhattan, sending a thick black smoke into the air close to one of New York's busiest financial and tourist areas. I have never heard of a car exploding on Wall Street. Now, maybe it happens a lot, but holy cow. I'm one of those people that's not going to spend a lot of your time on conspiracies. I'm not going to do it, but we have seen some things develop here in the last several weeks that really have caught my eye. The biggest one of which, there was an explosive device, an IED, found on a dam in Alabama, and the sophistication of the device was what blew everybody away. It was supposedly a grenade device, and it was remote control. Boy, I'll tell you what, that's that type of thing against a soft target like a water supply is big, and it has me questioning all of these events with real skepticism. So a car exploded Wednesday after catching fire in Lower Manhattan, and it was near the Bull. It was near the Charging Bull on Wall Street. So I don't really know. I don't really know what to say about this. We're going to find out if it was, in fact, an explosive device in the car. Cars don't typically explode when they're parked. If there was a crash, that's one thing, but we're watching all this stuff really closely, especially that being a time of war against Iran as well. Here's the other story that I want to cover, then we're going to dive into our FOMC minutes. 42 aircraft lost or damaged in Operation Epic Fury, congressional reports said. This just broke today, not too long ago, earlier this morning. 42 military aircraft have been damaged or lost. Here are the big ones, though, and this is sort of fascinating stuff. 3 F-15E Strike Eagle fighters were shot down over Kuwait, friendly fire, so that would be blue-on-blue incidents, okay. 5 KC-135 refueling tankers were parked. Those were blown up. I think we remember that event. This is the one that really blows my hair back. 1 F-35A Lightning II fighter aircraft damaged by Iranian ground fire. Those things are supposed to be untouchable. The F-35, to hit those from the ground means that maybe Iran has some capabilities that we don't know about on the ground. This is starting to turn into a real sticky situation. It's something that I don't think is going to be over anytime soon. Maybe it is, maybe it isn't. I think you're going to see a resumption of hostilities here relatively soon. 1 E-3 Century aircraft damaged while parked on an unprotected taxiway. You remember that? That was the big intelligence plane. The E-3 was like $1 billion or something, and they lost it. And 1 MQ-4C Triton drone, which reportedly crashed in a mishap. So a lot of this stuff's to be expected in a large-term militarization operation like Epic Fury. But what I'm saying right here is that we're finding out more and more and more about things all the time. And that's the first I've heard about 42 aircraft being damaged or lost. The one that I was really interested in was the F-35 that was shot down by ground fire. I didn't even know that was possible. Apparently it is. So we're watching all these news cycles and all these news stories very closely. The big one for today is going to be your FOMC minutes. We're going to go ahead and I'm going to give you the AI write-up. It seems like everybody's using AI these days. We're going to do it as well, just because it's going to give us a nice, clear, concise, complete look at what exactly happened at the last meeting. Okay, the last meeting were released on May 20th. The committee maintained the federal funds target rate. The record revealed a heavily split committee, 4 dissents. Okay, well, it hasn't been released just yet. But the big thing you got to remember about the April meeting is, yes, 8-4 vote on holding the target rate at 3.5 to 3.75%. Dissenters, 1 member voted for an immediate rate cut. We have no idea how you can justify a rate cut given these inflation rates. And then also 3 members dissented over the continued inclusion of easing bias language in the official statement. So, to me, when we're looking at things like this is what it's all about. Divisions awaiting wash to be on display in the Fed's minute release. This is what it's all about. We want to know exactly what the FOMC is thinking from a broader picture, from a broader perspective before the new Fed chairman gets in there. So we look at Fed policymakers split over inflation risks and future rate cuts. April meeting saw 4 dissents, the most since 1992, over policy direction. Market and economist expectations shift toward no rate cuts and see some possible hikes. Now, that has to do with our energy issues. Right now, I believe WTI crude is coming off big at about 6.2, 6.25%, down to about 97.67. Big time sell-off in crude oil, but the bottom line is it's still up there around $100 a barrel. That's bullish. That's really, really bullish. And to say that it's not bullish is it's just not correct. That's not accurate. So when we look at something like this and we say, okay, it's a bunch of paragraphs and words and things, think about what's going on in that boardroom. There's a deep division between rate cuts and rate hikes. Kevin Warsh was brought in by Trump to cut interest rates. Can you cut interest rates with crude oil at about $98 a barrel and war raging on? No, you can't. No, you can't. Not in this dynamic. If there is going to be some surprise interest rate cuts, maybe the market will explode to the top side. More than likely, that will be the case. Let's take a look at the U.S. dollar. Sort of as we await the FOMC minutes, you can see that what we have here is really sort of a bullish month, a bullish May, up about 1%. Very bearish, though. I mean, the dollar as a whole is very bearish, and this is where the administration really wants the dollar. They want the dollar to trade not necessarily in a weak position, but in a devalued position. At 110, somewhere up in here, against the majors, it's really difficult to do anything in the export sector. It puts an incredible lid on your on your foreign policy and what you can do with exports and trade deals and all of it. When the domestic currency is very strong, difficult to do any business abroad. It just is. I mean, your exports are going to be competing at a competitive disadvantage because they're more expensive to build here in the States. So a strong dollar really is sort of a drag on economic growth. So this area right down in here appears to be where we're going to be staying for quite some time. Now, if we get a surprise rate cut, which we may, then you're going to see this U.S. dollar fade. I think it was going to fade, before the war started. I had us going right down here to these 2021 lows, somewhere right around 90, 91. In my view, that was going to be the play. Already was licking my chops back in January to get short the dollar really anywhere that I could, and it's just not happening. And it's not happening because of the war, and the war's driven inflation. Jay Powell was not in any hurry to cut interest rates, and that's fine. I don't see how you can cut them in this environment. But now we're starting to price in chances of rate hikes. We'll take a look at those expectations here in a little while. Okay, let's go ahead and take on over to the gold market. 4-hour gold. I got asked this question the other day, and basically the question was from a trader in the How to Trade community that's been a member for quite some time. And it was a basic question. It says, Shane, I'm working a full-time job. Give me a time frame and a strategy to where I can just check in my trades here and there throughout the day, basically. So we're talking about a swing trading strategy. 4-hour chart for gold, 4-hour chart for your Forex pairs using this 920 EMA crossover. It's pretty good. It gives you an opportunity, number one, to manage trades maybe on a daily basis as opposed to a minute-by-minute basis like we were doing with our crude oil over there. But the big thing that we're looking at is when will we have to make decisions with our trades? You don't have to make them very often. 4-hour chart, you're only looking at 6 price bars per day. You could check in every 4 hours if you wanted just to monitor your trades. But these trades you could set up and just let them run. So something like this is beautiful. You see we're coded up. We're locked and loaded here with our 920 coded strategy. And that purple bar right there was our sell. That was our sell. And you can see that this play, you're short right there at market. Your stop loss probably would have been right above that swing high right there. You definitely got to put it there. And then your risk versus reward, that's just a function of what you want to take. You can see that one paid off at a 4-to-1. I'm not a big fan of that just because I like to win a lot. And it's a personality thing, but 1.25, maybe 1.5 to 1. Not a bad trade. And that one paid off relatively quickly. But think about it, a 4-hour trade. So you could theoretically make this trade sort of early in the American session. And basically you're just holding it into the next American session and you get paid. It's an overnight trade, a nice little swing trade. Nothing wrong with that. The beauty of a trade like that is there just isn't much to do. You don't have to sit around and go, okay, I'm monitoring my trade every 15 minutes, unless you have OCD and you're glued to the screens, sort of like I am. I don't have OCD, I don't think, but when I get trading, I like to know exactly what's happening at all times. But I understand that if you're working that full-time job and you don't have a lot of time to trade, something like a swing trading approach, 920 EMA crossover, 4-hour chart, I find it really a strong way to do business. Now, you don't have to. Certainly, you can go with smaller time frames. Maybe you only have a couple hours a day to trade. Then you're back to those 1-minute charts. Maybe trying to go with an approach that's going to keep you in the markets and engaged for the time that you're able to allocate to the market itself. Let me see. Dave's Apple. Can you apply this strategy on the 8, 6, 3 or 2-hour charts? Yeah, of course, Dave. I mean, you really can use this on any time frame you want. Now, what I always recommend is before you do it, do a little bit of homework. You're going to want to do a little bit of back testing, but you don't have to go very far with your back testing. A lot of people love back testing. I say go 30 days. I say go 60 days. Have a look. And with a 4-hour chart, I mean, it is what it is. 4 hours over 60 days on a market, you might only get 10 trades, 20 trades, something like that. But it'll be enough to give you an idea of exactly what's happening with regards to price action and your indicators. So I say you can use it on any time frame you want. I would never limit anybody's creativity. If you want to use a 3-hour, a 2-hour, a 1-hour, go ahead. For me, I like to keep things relatively simple. So I'm looking at daily charts, 4-hour charts, 30-minute charts, and we use that 15-minute chart on the orb strategies when they're appropriate. So this one right here, the reason why I'm bringing up gold on the 4-hour is we're working on a crossover. Probably a few hours off. Maybe we get it today. Maybe we get it tomorrow. Maybe the next day. But it looks like if price holds up in this area, we're going to have an opportunity potentially to take a shot to the long side. Now, what I would really like to see happen is this develop here in the next 2 or 3 price bars. We get our gold buyback. You can see we were in oversold territory here, which means what? We could probably put our stop loss maybe right beneath this swing low. Maybe if this market flattens out for a few hours, then we'll have a chance maybe to take a shot above 4,500 and look for maybe we get in on that run to 5,000. So I'm interested in this crossover. I really like this. The gold market has been fickle. And I mean, I've been very vocal about how I haven't really liked gold, trading gold for quite some time now, really since the war started. But there have been some good moves. You can see right back here, we had a sell signal on that doji. That's a massive move. And then you got the buy signal right here. You got a pretty good move. You really did get a pretty good move. I mean, your bid would have been right there at about 46.64, and your high up there is about 47.64. So pretty good stuff for about what? $100 move or so. Not bad at all. And then this one, the market just sort of falls apart. Your sell could have been right up there, right around 46.79, and now you're down here right around 44.56. So I'm interested. I would be interested in a buyback here. I think we're in complete rotation with gold, even though it looks like it's trending on this 4-hour. When we step back to say a daily or a weekly, not much is happening. Realistically, guys, that's a killing field. That is really difficult stuff. Really difficult. So you are developing a cross under, it looks like, on this weekly chart. Be really tough to trade a weekly time frame on this strategy just because the ranges are so darn big. But something like that, spike low to a spike high, and sort of this was the area that I highlighted yesterday as being robust downside support for gold. Right in this zone right here, right around 4,400. I think you got a pretty good opportunity there to make a little bit of money if we do get a chance to buy 4,400s. We were close earlier. I mean, we really were close. This low was right down there, about 44.53. So we were only about $50 away. I like that 4,400 area. Probably look for a trade idea and a potential buying setup from down there if we do sell off. But until then, if I'm looking at short-term price action, I'm looking at that 4-hour saying, yeah, we might actually get a 4-hour crossover trade. Now, here's the beauty of this strategy. If you want to dial it down to, say, a 30-minute chart, there you are. You're already long. And that area right there, pretty good trade. Got a little bit chaotic earlier today. And then you got the big rally. So, I mean, you can't really argue with that not being a profitable set, a profitable trade. Pretty good stuff. All right, let's go get the bad news on our 1-minute trades. Typically, these are always a challenge to get. But you can see we got swept out on both accounts. And that's why you always watch your risk. Always watch your risk. We had a nice, good initial price action. And now the market's falling apart. Remember, your first loss is your best loss. Now, this is spot WTI and spot Brent. These are CFDs offered by Switch Markets, and you can see right in here, we're getting down to that 100 level here in the spot market. So this is a significant sell-off today of about 7%. No question about it. WTI crude in a free fall intraday. A lot going on, really a lot going on here in these markets. Let's go ahead and see if we can sniper the bottom again here. We're back into oversold territory. So if we do get crossovers back above that 9 EMA, we can certainly take a shot at it. Just remember, we're fighting a hellacious trend. So if we do take the shot at it, we're going to be watching our risk closely like we just did. Always tough fighting trends with these short-term time frames, guys. Remember that. If you do catch the bottom, it can be lucrative. But if you don't, you can just keep getting eaten up and eaten up. A lot of times counter trend plays, they're lower probability. There's no question about it. Absolutely no question about it. Let me see. BabG's, the market ripped my trades apart today. Well, that's no good. ripped them apart. That's pretty much what happened to that WTI and Brent play right there. We're going to hit it again here in a minute, but fighting a trend like that, I probably should make a video saying, hey, watch trends. Stiff trends, watch them. But yeah, this is an interesting type of a session. We've got U.S. stocks are way up. Commodities are down, and that's that not all commodities, but just energies. Energies are off pretty big, 6.7% in U.S. oil. So all of a sudden, oil futures are down to about 97.05, 97. The pretty big deal there for oil. Oil down, stocks up. All right, let's talk a little bit about sort of the news of the day. We got some trade updates here. I can run through these relatively quickly. We're just not there yet. Here's the first trade update, dollar CAD. You'll see that we just are still waiting on 85. We had a nice top out today at 137.78. Now we're down to 51. So we're right in our range. We just haven't quite got filled yet. We're going to go ahead and just stay patient. Stay patient and wait for that one. I think it's going to be a pretty good trade. The other one we had was for the Kiwi, and it looks like we missed this one. The Kiwi, we had a beautiful bid right down there at 58 we were looking at, and you can see there was sort of our sell-off yesterday, 58.15. Maybe we just weren't aggressive enough. Now you're up to 58.71, and really what was I would call a robust, a fine topside scalp right off of this downside support. Pretty good stuff. We just didn't quite get that hard test of 58. Now, I'm going to go ahead and keep it on, and we'll see if we get it maybe a little bit later in the week. But as far as I'm concerned, we probably missed that entry. Okay, week 21. Today's going to be the FOMC Minutes. That's going to drop here in about 39 minutes. We sort of already went through what you can expect out of that, and it really does all boil down to this split right here. April meeting saw 4 dissents, the most since 1992 over policy direction. And going into a new Fed chief, what does that really mean? What does it really mean? Well, it means there's problems. It means that some people want to cut, some people want to hike rates, and now you've got a new skipper coming in that has to deal with that angst. So I think that it's going to be a challenge to figure out what the Fed's going to do, probably at least for one or two meetings. All right, here's some of the news of the day, and we got a couple of questions here. CPI out of the UK. We're going to go ahead and look at that Great Britain pound USD here in just a second, but pretty good level, pretty good support level we hit last week. But CPI out of the UK, we're watching these trends. We saw Canadian CPI come in, actually fell towards the 2% objective, as opposed to what's happening here in the United States, where we've just seen an explosion of CPI and PPI and anything else you want to talk about that deals with inflation. But this CPI number right here, you've got 2.8% down from 3.3 previously and beneath expectations. So on a yearly basis, the UK CPI isn't looking too shabby. You've also got the raw index data. You'll notice that that's up. That's pretty much par for the course with those index data points. But core CPI, 0.7%, beneath 0.8%, and above 0.4%. So not necessarily a horrible number. Up a little bit, but not as much as was expected. So the core CPI figures still growing just a little bit. Over in the United States, the MBA 30-year mortgage rate, something I watch every week, 6.56%. We're headed back to 7, it looks like. So we're going to get back to that, stick a pin in it. Let's take another shot. I know I'm moving fast, but if you're scalping, you got to move fast. Let's go and send them. All right, we're playing against the trend. So what I want to do is we're going to be really tight. Really tight. We're just looking for a bump here, and if we don't get it, we don't get it. You see right there, I'm going right beneath the signal bar. We've already got swept out of one trade today. Let's see if we maybe can get this one. Once again, we're fighting a stiff trend, and we're trying to buy a bottom. Give that a little bit more room to work, but not much. If this thing starts going against us, I want to get the hell out of there. All right, right there. I feel pretty good about that stop loss. And let's go ahead and shoot for just a little bit more to the top side. So what's happening right here, basically we're seeing a little bit of compression on the spot market right around 101. So we saw sort of a bounce off of 150 back up to 101. Is that area going to be resistance or support? Well, right now it's acting as resistance. If we can get some bids above 101 right here, we're probably going to get paid off. Now, fighting a trend like this, though, typically all the round numbers to the top side. All the round numbers to the top side work as resistance. And look at, it's just the way price action works, guys. Take a good look at what's happening right there. Right there. Look at where we're at, 100, 196. Okay, there's 101 print. Do we get any leverage? Do we get any mojo above 101? The sellers are defending it because why? You're in a stiff downtrend of about 7%. It doesn't mean this trade can't win, but it means that's where the battle is. Okay, now we're at 101, 105. Okay, there's the pop. If we don't get paid off right now, we're probably in trouble. We need to get a little bit more of a pop. We got it right up to about 101.09. that pop across the board should have filled us up a little bit, and we didn't get filled. So what's happening with our trade? All right, we got in. We got our pop above 101. Price action starting to really act favorably on us. But take a look at what's happened here. The last, 5 bars, 5 or 6 price bars, they've all been positive. Can this market sustain this type of action moving forward against this stiff of a trend? Our odds are, the longer we're in there fighting this trend on a scalp, probably the worse our odds are over the long run. Now, we're in this trade. We've got it built. We're going to let it play out. That's just the way it is. We're going to fall back on maybe our take profit being conservative enough to give us a chance to win this thing. Maybe we should move our take profit up a little bit and expect a top side pop. Okay, right there. That was a good pop. We got filled up and won the trades. However, when you're going against a stiff trend like this, I would much rather take small losses than sit around waiting for this thing to reverse and maybe buy the bottom. Now, long term, going into today's close, I'm definitely going to be bullish crude oil, no question about it. We've placed those point of control trades how many times this week? Both of them cashed. The one yesterday blew up and hit our profit target up at 104.50. I mean, so those trades have been cashed towards the end of the day. Do I want to hold this trade, though, on a 1 minute? You know, you can, but just remember that if that's your strategy and you're going with those 1 to 2, 1 to 3, 1 to 4 risk versus rewards, you're going to lose a lot of trades. And if you lose a bunch of trades in a row, the drawdown and the damage done to your account can be absolutely brutal. Absolutely brutal. But still, decent trade right there. We won both of those. Those were very tight scalps. And as you can see, we took a bigger loss up here and a smaller gain down here. It's really tough to make a living doing that over the long haul. Interesting stuff, though. What I would love to do is maybe get this thing to top out a little bit and then give us a sell. Then we could take a shot, maybe at a late day sell where this trend continues or trades down toward the bottom of the daily value area. Okay, let's see. Gold. Yeah, I already covered gold. Well, we can scalp some gold here in a second, though. That's for sure. We got a couple questions. I'm a little bit behind here. So the NBA 30-year mortgage rates are up. You'll see the mortgage applications are down. That's not a good sign for this time of year in the United States. I think you're going to have an interesting year in real estate if the Iran war continues. No question about it. And then crude oil inventories, that really was the big story today. Crude oil inventories down 7.8 million barrels in what was just a downside route. So U.S. commercial crude oil inventories, excluding those in the Strategic Petroleum Reserve, decreased 7.9 million barrels from the previous week. At 445.0 million, U.S. crude oil inventories are about 2% below the 5-year average for this time of year. Something to remember, 2% below the 5-year average. The 5-year average has been dismal. Bottom line, it's been bad. We have been consistently running deficits under the 5-year average. We started to get on the plus side of that right after New Year's back in January before the war started. But right now what we're starting to see is those supplies, the U.S. oil supplies are dropping, and there's no question about it. So when we're looking at our trend, yes, it is true that May, as we roll into May and June, that's sort of peak production to meet the refined fuel demands. I got to get this going here. The refined fuel demands for the summer months in the Northern Hemisphere, especially here in the United States. That really has to do with ramping up gasoline production, using more oil to meet your logistics needs of the summertime months and your travel demand. Last May, we saw this trend is sort of where we are right now. This year could be a lot worse, and that's because of the Iran war. One of the things I didn't cover was imports. Imports were down. Imports are going to be down. So if the United States, doesn't boost production, and production is up a little bit, but if you don't boost production to offset really the loss in imports and satisfy the spike of the springtime, the late springtime and early summer travel demand, then you're probably going to see rising oil prices just organically, and that's aside from what's happening in the Iran war. So a lot going on here with crude oil, guys. A lot going on with crude oil. Let's take a look at the Great Britain pound here, and then I'll answer some questions. That's for sure. Salmon, gold again. All right, I'll take a look at gold here in a minute. Great Britain pound USD got a nice big rally there, and then we pulled back. We sort of hit that one pretty good, that 133.50 zone. I believe we had 55 buys. That was a pretty easy trade. We sold off a little bit down there, 133.02, but we stayed above 133, and the rally's been significant, about 100 pips since we hit our downside support level. So I'm not really interested in selling the Great Britain pound US dollar. I would much rather buy it again down there at 133.50-ish, but right now we're just sort of in no man's land. We rotated to the top side. We're testing out our 13-week EMA at 134.53, somewhere in there. Potentially, that could be an intermediate-term top for this week, maybe a weekly top. Now, let's head back on over here, and we'll use our 920 EMA crossover. You can see exactly what's happened. Really the same formation as gold today. You can see really there's your bid, and during the pre-market, the volume shows up, and now you're sort of kicking tail to the top side. And that's all great. It's fine and dandy. What I would be looking at here on a Great Britain pound play, potentially 4-hour chart. No question about it. Now this has a really interesting dynamic setting up. Number one, you're starting to get that 4-hour buy signal. Okay, do we like it? I like it with respect to it's gonna give us a concrete trade in a way to get in and out of the market here with this pound. Now, what should my entry be? Well, you got this elongated 4-hour, this nice big run. I mean, if all really price has to do is hold in here, and we're going to get our crossover. This may be one that you wait for a little bit of a pullback before you get in. You might want to wait for this price bar to fill in a little bit. I don't necessarily know that you need to buy up in here. Let's say if we get a close of this next 4 hours somewhere right around 134.60 or something like that, maybe even 134.80. I'm not really sure you need to buy right there. I probably would wait for a pullback. And if I got a pullback maybe to my averages, which a lot of traders do, they swear by it, a great way to improve your entry and still trade the 920 EMA crossover, then maybe you wait for the pullback. But for me, I don't know how giddy I'm going to be if I have to buy way up here and I can see this hole in the market right in there on that big sort of move up. Typically when we see moves, we see retracements, but we'll see exactly how this one pans out. Still have to get that crossover, and there's a 3.5 hours left in the price bar. So it's going to be a while. It's going to be a while before we get the thumbs up on exactly when and how to trade this thing. All right, let's see. Gold. All right, I'll cover gold here in a second. I have a question over in the How to Trade community, though. Let me see. Ralph H. Good to see you, Ralph. My apologies for getting behind on the questions. Is there a reason other than news that would cause you to say that a trade is invalidated that you're already in, that would cause me to close the trade? If we're tick scalping, yeah. If the markets aren't behaving, if I jump in and let's say I buy, like let's just give you a quick example. Let's say I'm over, we go to U.S. oil and I go to my oil futures. And let's say we dial up the point of control and we take it down to a 30-minute. There's the POC there. There's the U.S. session POC. Value area is huge. So let's say, for instance, I was in this trade and I wanted to sell, or let's just say I wanted to buy it. Let's buy it right now. If I'm going to get into this trade and I'm looking for immediate positive price action, I say, okay, I like my timing right now. Let's go ahead and buy market. What could get me out of the trade right now? Negative price action. Get me out of it fast. So let's say I'm in this. I'm saying, okay, I'm looking for this trade to rotate up. Now we're starting to rotate beneath 50. Let's say 97.50 was my linchpin, sort of where I wanted to be. Then if the price breaks against me, I'm just going to get out. That would be a case where price action would just get me out of the trade without any news. That would invalidate it. But this is a very tight tick scalp. It's a tick scalp. So if we're making a trade like, let's say, this Great Britain pound trade, really not much going to get me out of it. Let's say we build our long, just to sort of give you an example. Let's say we get our bid there. I know exactly where my stop loss is, right beneath that swing low, and I know where my target is. Let's say it's right up here towards the top of this market structure, something like that. That's my trade. That's my trade. Once the trade is set up, I don't really want to go too deep down the rabbit hole of I don't want to go too deep down the rabbit hole of messing with it. If it's a strategy trade, a 920 strategy or something like that, I just want the money. I just want the money. And the reason why I would set this up and why I say I want the money is because I don't know what's going to happen in this world. It's called systemic risk. We're exposed. As soon as we're long in anything, we're exposed. Anything can happen to our trade. And what we have to realize is that as long as our stop loss is legit and our profit target's legit, then we got a chance. So not much would scare me out of a structured trade like this. Now, let's go back to my crude oil trade. Now, all of a sudden, I'm up $1.40. I'm up $140. We just took the trade. Pretty good buy right at 53. Okay, I'm out. I'm out right now. What would have got me out of that trade? price action and the way it unfolded. Let's say price goes against me immediately. I'm gone. I have no desire to wait around for it. But this, on the other hand, this trade, it went positive for me, and it went positive fast. That also got me out of the market. So for me, it's sort of a rule of thumb, especially when I'm tick scalping and we're getting into the market and we're waiting. We're trying to hit the timing of it perfect. If the market goes against me, I'm gone. If the market goes in my favor, I'm taking the money and I'm moving. But that's just with tick scalping. A strategic approach like this, where my trade's already built, I'm going to leave it alone. Now, there's some other things we need to consider. How about this trade right here we sort of been promoting on the dollar CAD? Let's say we get this short. All right, let's say it goes up and it gets this short and we're holding it for maybe a bigger gain. Maybe we take a position or a swing trade, and then your news event comes in. Let's say all of a sudden, the Iran war's over. The United States leaves unequivocally. Let's say that the Iran war kicks off or there's big-time news events developing around the world. Probably got to scratch it at that point. Probably got to scratch it. And the big thing would be, well, Shane, you're going to have your stop loss in the queue. Why don't you just let the trade play out? The thing about incredibly supercharged news is that just because you have a stop loss in the queue does not mean you're going to get filled. And that's the reality of it. Most of the stop losses we use are stop market orders. And what a stop market order is as soon as it's touched, it fills you at the best available price. Well, unfortunately, that may not be a good price for us. So that, as soon as, let's say I was holding shorts here in this US dollar, Canadian dollar trade, and I'd say, okay, I really like my situation here. Oh, what's going across the news line here? Oh, no. I mean, we've seen escalations. Maybe a boat's getting sunk in the Strait of Hormuz. I'm probably going to bail on it because of the correlation of crude oil and the ability for volatility to really just send this market anywhere. So I hope that answers your question a little bit, Ralph. It's a great question. Price action would invalidate a tick scalp. But as far as something like this, we're just going to let it roll. I would let it roll. You could say, does the news argument hold with this as well? I'd say, yeah, probably. But what kind of news would really shake up the Great Britain pound US dollar? I wouldn't feel too bad about anything, really. But if WTI crude, something like this, I mean, take a look at this. This is down to 97.36. We were just up at 97.70. Probably a pretty good idea to take the money there. I don't know. A lot going on. It just depends on how you want to manage your trades. For me, I'm pretty aggressive. That's for sure. All right, let's take a look at gold. All right, gold is this was the trade that we were scouting earlier. I'm looking at a 4-hour, potentially a crossover developing here. This down here, though, this weekly level is one that I really like. 62% down there, right around 4,400. Somewhere in that zone, that's maximum. I mean, that's fantastic. Optimal support. That's what I would say. That's some great support down there. So I'd be looking to bid 4,400s. And, a lot of folks are going to say, you're never going to get there. You're never going to get there. I'd say, well, we were printing 44.53 earlier today. We were right down there. We could easily get that by the end of the week. Easily. As far as how would I be trading gold right now, right this minute? Well, let's go ahead and take a look. I have been known to trade some gold futures. That's one of my favorite markets. And we've also got our TPO, our time price offering charts out there. We'll take a look at what we have today for gold. You're only up about 0.5%. Volumes really low. Really, really low. We would actually have to see if this is still the front month contract. It may not be. We may have already rolled to August. But just if we're looking at June gold, 45.38. So we're pretty close to the spot price. In any case, we're looking at our volumes. It just isn't significant volume in my perspective. Let's look at our daily volume here. This will give us an idea. Okay, about 137,000 contracts. All right. I mean, it's tradable, I guess. It's not great, though. Point of control for the U.S. session is down here, right around 44.85. Pretty good. I would be looking to bid that. But you can see the breakout outside of our value area is very much valid. So we've got that B formation setting up, right? We got the sort of the bell curve down here and the bell curve up here, and the idea is that you're going to fill this in. I mean, we could look at this a lot of different ways, everybody. We really could. Let's put our TPO charts away for just a second. Spike low, spike high, crude oil futures, or excuse me, WTI. It's going to be COMEX gold futures, excuse me. This 45.25, 45.24. Yeah, that's probably a pretty good bid late day. more than likely a pretty good one. You can see that the uptrend is clear as day. There's that's opening bell ding ding on Wall Street. Then we got the big move in there right around 10 a.m. Nice big rally, and since then we've been chopping sideways. I mean, this is just an uppercase P. So that boom, that's a P. What's a P? A P is a bullish formation. Run and rotate. The bottom end of that rotational zone is right around 45 and a quarter. Really wouldn't be a bad bid late in the day. You probably could get a nice little scalp off of that. So definitely something I would be looking at for gold potentially here in the next few minutes. A couple things I do want to check out here. Let's just go ahead and have a look. CME FedWatch, 28 days until the powerful Kevin Warsh takes the stage. I'll have a lot more to say about Kevin Warsh before we get to the meeting. But 96.9% chance that rates are going to stay exactly where they're at. And let's go ahead and put this, let's look out. Let's look out a little ways to December. We're almost already halfway through the year. So when we start looking at December's sort of distribution of where we think interest rates are going to be, only 50% believe that we're going to be at 3.5. All of a sudden, the markets are pricing about a 50-50 chance that you're going to get a rate hike, at least one 25 basis point rate hike. That's incredible. That's absolutely incredible. So we go from rate cuts to rate hikes, and it all has to do with WTI crude oil. It has to do with the Iran war, and it has to do with inflation over this summer potentially becoming one of the biggest market drivers we've seen since COVID. A lot of economists are out there ringing the bells and just saying, hey, the sky's falling. We have to get realistic about what's going to happen in this economy. Given this energy strain, I think anything can happen. Be that as it may, I mean, take a look at where your markets are today. Dow Jones is up 600 points. S&P 500 is up 68 points. The NASDAQ's up 1.34%, 385 points. I mean, you remember our NASDAQ trade. I don't know if you do or not, but we can go ahead and pull it up. For our NAS, let's go to a daily. I mean, there it is. No question about it. The daily compression is very real. We've got sells. We're looking to sell right up in here, 29,975, 29,950, somewhere in that zone. That's where we're looking to sell, right in front of 30,000. But make no mistake, I mean, this is a lot of folks would call this a bullish flag. I'm tending to agree with them. The longer that we trade and compressed in front of 30,000, the greater chance we have to really blow the top off of 30,000. For me, I don't believe we're there yet. I think that we're still got enough distance, and we're this market's elongated. It's called a stretched market. Definitely trending, no question. Nice pullback here right to our 13-day EMA, which is right there at 28,612, and then we've rallied big time off of that, and now it looks like we're going to go up and have a look at 30,000. There's no real reason for it. I mean, take a look at our interest rate expectations. We're starting to price in a rate hike by the end of the year. If that's the case, how are we going to justify the NASDAQ at this level, the NAS 100? Blows me away. Absolutely blows me away. This is one of those markets where we just sort of look at it and go, these things have a mind of their own. The bulls are in control. Bulls on parade. No question about it. That's for sure. Let me see Gordon Williams. Good to see you, Gordon. All right. Yeah, I mean, we've already, let's see. Eli, any tips for Nvidia's options trade? No, not really. I mean, when you start, if you look at that NAS that we just looked at, it does look like tech's getting ready to make another leg higher. So take a look at Nvidia. You know, you've got this epic rally and then this pullback. I mean, it's pretty good symmetry, really. Spike low here. Pull back. Where'd you fail at? 38%. Very bullish. I mean, extremely bullish. So if you were looking for a big move, you know, options is all about grabbing a big move when no one else thinks you're going to get one, either to the bull or to the bear. What could bring a Nvidia sell-off on? Nothing. I mean, really, what's going to bring it on? A lack of chips? Remember that we made a video not too long ago, the problem with helium in the Strait of Hormuz. And that did nothing to hamper big tech. As far as earnings, NVIDIA earnings take it past 30,000. Yeah, it was NVIDIA earnings today, isn't it? Or today or tomorrow? There's the minutes, housing starts. I don't know. In any case, when you're starting to talk about the different prospects for Nvidia, I mean, the sky's the limit. I just don't think earnings are going to matter in the long term. We're just knee deep in the AI boom. I've talked a lot about AI. Everybody's talking about AI right now, and it's going to go higher. There's no question. So what's Nvidia worth in a world that's dominated by AI? It's one of the biggest players. It'll be one of the biggest semiconductors players in the world by far. I mean, it's going to be the guy, the player. What I'm saying is there's just no rules. The problem with the question about options is that we have to time the move perfectly, and how do we do that? I mean, looking back in here, we would have loved to have snapped up some Nvidia back in December of 2021, huh? I'd say. You're looking at, what, a 200x payoff, something like that? So now we're pushing all-time highs. Clearly the rules don't matter. I would look at a historical chart like this and say, okay, what was big here? 100? Not really. 100's right here, right? Went up, got a little bit of compression, broke, and then that 100 was support. Everybody was buying hundreds. They weren't selling them. Now you're up here. How about 200? What was behavior around 200? A little bit different. A lot of sellers here at 200. Compression, and now we broke above 200. I mean, what do you think? 250? 275? 300? There's no reason to believe it won't go there. When? That's the problem with options. That's the problem with options. I mean, you know, when we start talking about where would I like to buy from, I mean, I can give you an investment play. I can't give you investment advice, but I can give you an investment play. You remember the video we put out a long time ago on howtotrade.com, rally, base, rally, rally, base, rally. This base area, somewhere right in there, right around 180. It'd be tough to miss. It would be tough to lose money getting an entry somewhere in here. But as far as what could we do with an options, you could try to you could wait for a big run to 250, 275, or 3, and then maybe get some put options going, and then just bet that you're going to get a pullback for a week, maybe 5 days or a week. But I would have to see a test of those levels first, and maybe a daily doji or an inverted hammer or something, and put on a real short term. Buy some short-term puts. But other than that, I mean, options are trouble, man. I mean, if you're good at them, God bless you. But I have very little experience trading options because of the timing. I just as soon get in there and work directly with price action. That's sort of what I like to do, as opposed to try to predict when something's going to happen. Yeah, it's not advice. No, Eli, I don't give advice. Don't say nice advice. I don't give advice. We're not signal providers and we're not financial advisors. Let me see. Babjees, won't Nvidia earnings take it past 30,000 if it has positive earnings? Yeah, I mean, Nvidia is really running the NASDAQ, but right now we're trading at 29,205. I would be surprised if Nvidia's earnings jammed at another 800 points. I really would, but anything can happen. It's the NASDAQ. I would actually like to see a challenge of 30,000 on positive earnings. That would be great because a lot of that would be artificial price action. A lot of folks piling on, take a shot at 30. Maybe tomorrow reality sets in and then you get your pullback and we're in and out before anybody knows we were there. So that's exactly right. All right, let's see. Explain important points about the FOMC meeting today. You know, basically it's this. How does the Fed impact the Forex? If it's dovish, it's bearish for the USD. If it's hawkish, it's bullish. What you're going to see today is going to be a division. There's going to be a lot of dialogue in there. Remember, it's not going to spike the markets right away. You're going to have to wait for the media to sort of interpret what the minutes said. I dropped the link in the live chat there. Feel free to check that out if you want to check it out, the exact statement live. But when we talk about what the FOMC minutes is, it's going to be, number one, it's a press release. I know that's obvious, but you're going to have to read it, and the media is going to have to read it, and they're going to have to figure things out for themselves, or they're going to have to run it through the AI real quick and try to figure out what it says. To me, it's not going to mean a whole heck of a lot because Jerome Powell is gone. We know there's a division in that boardroom. We talked about the division in the vote. There was one person voted for a rate cut. I don't know who did that. And then there was, two or four that wanted rate hikes. It was the most divided that the boardroom's been since 1992. So all of that's not going to mean much when the new Fed chief comes into town. And that's going to happen in June. So to me, you can read whatever you want to read out of these FOMC minutes. I wouldn't get too carried away with them. But just remember, dovish sentiment's going to be bearish for the USD. Hawkish is going to be bullish. More than likely today, you're going to see bullish. You're probably going to see bullish because of the the energy. What's the pressure being put on the energy markets is going to be huge. And then also the idea of a resumption of the Iran war, potentially driving some bids to the dollar, is also going to be huge as well. So it was, if you guys tuned in for the last FOMC Live, I sort of just sat there and said, this means absolutely nothing. In my view, today's minutes mean nothing. We want to see the dynamic of that boardroom once Warsh has been seated and once he sort of assumes control of it. And we want to see the attitude of the Fed moving forward after June. In my opinion, right now, it means very little. It means very, very little. Just my 2 cents. So I hope that helps you a little bit understanding what's coming. Let me see. Nvidia post results. Nah, I don't think so. Not yet. They'd probably do it after market, wouldn't they? Yeah, I mean, these are, let me see, ahead of Nvidia earnings. I wouldn't really worry too much about it. I would be careful if you're trading Nvidia stock or CFDs, but I don't know. I'm not real big on trading earnings. I'm really not. It's too big of a gamble for me. A lot of times you'll see earnings come in, like our trade not too long ago on Planet Fitness. It was brilliant. If you guys remember this one. Sort of, there was our gap. We talked a lot about this gap area. You had a big gap right there. We knew we had a very good chance of trading at least 50 from this bid down in here. We said that gap's going to get filled in. It got filled in. But take a look at the earnings right here. Earnings came out for Planet Fitness. They had a top side and a bottom side beat by 17.6% and 13%, but something was said in the call that did not go over well with investors, and you saw the major crash and now the buyback. That stuff like that is why I don't like trading earnings. I would much rather see Nvidia develop a gap, and then we can attack that gap. And then we have real high probability trades of nailing this. I mean, this trade right in here, we were talking about bidding right on that next open, which is 42.52. You're already up. You had a high of 55. I mean, you're grabbing a nice 25% gain in just over a week. That kind of stuff is how you really nail stock trading. As far as options and things, I'll leave that to people that are much smarter than me. How's that? All right, everybody, I'm going to go ahead and sign off for now. You've got the FOMC minutes. They're going to drop in 8 minutes. I would cover it live, but honestly, there's no press conference. There's nobody talking. All it is going to be is just a piece of paper. Everybody's going to read it, and they're going to draw their own conclusions. What is important about the FOMC minutes is that you see a situation where it's interpreted, and the media is going to drive price action. They will. The headlines will drive price action. So that's something that you're definitely going to want to be aware of. Read it for yourself if you want, but pretty much just take a look at what the media outlets are saying and remember that this one doesn't mean much. Here are your latest headlines, though. These do mean something, and these are big. These are why crude oil's down. Right here, U.S. crude oil falls below 100 after Trump says Iran talks are in the final stages. How many times have we heard that? Who are they even talking to? Nobody knows. This right here, though, is interesting. This right here is interesting, too. UAE says new pipeline that will bypass the Hormuz Strait is nearly 50% complete. This is the first we've heard of this. The UAE left OPEC, and now they've got a pipeline that's almost half done. You know, it's one thing to build a pipeline, but you have to keep the drones and the missiles off of it. I'm not buying any of this. I'm sorry. I'm not buying any of this. I think you're in for another rug pull, no question about it. All right, let's see. We're looking for Nvidia earnings. Let me see. All right, Nvidia reports first. Let's see. Nvidia reports for fiscal first quarter results after the bell. Here's what analysts are expecting, according to LSE. EPS is 176, revenue 78.85 billion. That's pretty good. That's not too bad. And if you remember, Meta today cut 8,000 jobs. If you're one of the ones that were laid off by Meta, that's unfortunate. The severance packages look pretty good, though. But Meta downsized by 8,000, 10% of their workforce, and they are going to make investments into AI, which is all anybody's talking about. AI. Well, here we go. We'll see what Nvidia's got. But remember, just because it reports good earnings does not mean that the stock will go up. I'm not sure that the earnings even matter to Nvidia anymore because of what's happening in the buzz around AI and their position in the sector. No question about it. That's a wrap. All right, guys, have a fantastic trading session. Beware the FOMC minutes. Read them up. We'll recap them tomorrow. I've got another live stream tomorrow early. That's going to be an 8 a.m. kickoff my time, 10 a.m. Eastern, and that's going to be a live webinar on how you can trade the 920 EMA strategy. With a bit of luck, we'll have a gold trade to scrutinize that I can show you, and we'll go ahead and build it out. All right, everybody, that's a wrap. Have a fantastic trading session. As always, trade the action well, and we'll talk soon. See you. A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today.